Okay, let's just dive right in. In 2025, the silver market is doing something we haven't seen in over 40 years. It is absolutely exploding. I mean, after decades of just being stuck in a range, the metal has gone on this historic parabolic rally that has left pretty much everyone scrambling to figure out what on earth comes next. So let's get into this incredible story.
And just to put this move into perspective for you, depending on which exchange you're looking at, silver is up over 170% this year alone. That is a staggering number. It makes silver one of the best performing assets on the entire planet right now. It's the sheer speed of this rally that has everybody talking.
And all that talk has basically split the experts into two totally different camps. You've got one side saying, this is it. This is the super cycle we've been waiting for, and we're headed for triple digits. And then you've got the other side saying, whoa, hold on. This looks like a classic blow-off top, the final crazy act before a long, painful bear market. So which one is it?
To really understand the bull case, we've got to look at the framework a lot of these analysts are using, and that's the Elliott Wave Principle. They believe this isn't just random market chaos. They see it as a predictable pattern that's been building for decades.
Now, this is where it gets really interesting. Look at the history here. For over 40 years, that $50 level was like a brick wall, a psychological ceiling. The market hit it way back in 1980, and then again in 2011, and both times it was just brutally rejected. But the 2025 rally, it didn't just test that ceiling, it completely shattered it, launching silver into what traders call price discovery. Basically, we're in uncharted territory now.
So what is this Elliott wave theory anyway? Well, think of it like the market's DNA or its heartbeat. The idea is that human psychology, the crowd's fear and greed, causes prices to move in these recognizable patterns: 5 waves up in a bull market and 3 waves down to correct. For the bulls, this 2025 rally is the most powerful part of that whole sequence, that final explosive 5th wave. And this is a brilliant illustration of the theory in action. Back in November, right when everyone was getting super excited, silver pulled back, and it pulled back hard. But instead of panicking, the Elliott Wave folks saw a classic ABC correction. They didn't see it as the end of the rally. To them, it was a necessary pause, a healthy reset that shook out the weak hands and just coiled the spring for the next massive launch higher in December.
Okay, so where do the bulls think this is going? Well, they use a tool called Fibonacci extensions. It's basically just a set of mathematical ratios that help traders predict where the price might head next. And those ratios are pointing to some big potential targets around $73, $88, and $94. And then, of course, there's the big one, that $100 psychological barrier. To get there, the market would need a parabolic blow-off, basically a final, frantic surge driven by pure fear of missing out.
But listen, this rally isn't just about lines on a chart. This is so crucial to understand. Unlike gold, over half of all silver gets consumed by industry. It's an absolutely essential, non-substitutable metal for huge growth sectors like solar panels and electric vehicles. This creates this powerful, consistent demand that kind of acts as a floor under the price, because industries have to keep buying it to keep their production lines running. But just when the bull case seems totally airtight, there's a compelling and a very different view. Some really respected analysts are out there warning that this isn't the beginning of a new era at all. They think it's the spectacular end of an old one. So let's explore the other side of the coin.
Now, one of the loudest voices in this contrarian camp is analyst Avi Gilbert. What's so fascinating here is that he's using the exact same Elliott Wave toolkit as the bulls, but he is coming to a completely opposite conclusion. He believes the entire cycle that began years ago is about to end, and what comes next? Well, it won't be pretty. So the contrarian case really rests on 4 key risks. First, that this rally isn't the start of something new, but the grand finale of a very old cycle. Second, a massive flood of new inventory is hitting the market, which could ease any physical shortage. Third, there's the risk of a broader market crash that could just pull silver down with everything else. And finally, these super high prices could actually force industries to innovate and use less silver, which would destroy demand in the long run. Let's just focus on that inventory point for a second. So contrary to the popular story you might hear about a massive shortage, recent data shows over 212 million ounces have been added back into exchange vaults. This so-called #silver flood directly challenges that whole idea that a supply squeeze is what's driving prices sky high. And here's another critical piece of evidence for the bears: the gold to silver ratio. This just tells you how many ounces of silver it takes to buy 1 ounce of gold. Think of it as a market hype meter.
When silver gets really expensive compared to gold and speculative fever takes over, the ratio drops to extreme lows. We saw this at the huge peaks in 1980 and 2011. And while the ratio has fallen recently, it's still nowhere near those historic lows. To the bears, that signals the final, euphoric top might still be ahead. Or maybe this rally just doesn't have the legs to get there. So, here we are. We have two completely different narratives, both using similar tools and arriving at polar opposite conclusions. On one hand, you have a super cycle that's just getting started, and on the other, a massive crash that's just around the corner. Let's just lay them out side by side, plain and simple. The super cycle path sees this rally blowing past $100, maybe even towards $140 an ounce into 2026. The bear market path, though, sees the rally fizzling out somewhere between $75 and $85, followed by a painful, multi-year correction that could drag prices all the way back down into the 30s. The stakes really couldn't be higher. So what should we be watching for? Well, analysts on both sides are zeroed in on these key levels. That resistance zone between $88 and $95 is where the rally could really run out of steam. On the downside, silver absolutely has to hold above $70 to keep this crazy momentum going. And the ultimate line in the sand? That's around $48. If we break below that level, it basically invalidates the entire bullish setup for 2025. Which brings us to our final question, really. The 2025 silver rally has been one for the history books, no doubt. It's been defined by incredible momentum and this growing sense of euphoria. But is that euphoria a sign of unstoppable strength that's going to carry prices to levels people once thought were impossible? Or is it the classic signal of a final frantic peak right before a very, very long fall?